Okay, guys, it's Wednesday, the third day of the third week of March. The week so far has been break even for me with one trade yesterday where I was executing reversal sells basically. I'm gonna do a trade breakdown of the trade in a few hours, which I'm gonna post on YouTube for you to understand why the model for me was valid in first instance, why I took it, how I analyzed it, what my intentions were, and the conclusion of the trade. So coming but today now on to the pre-game plan for the New York session on Wednesday. I do not think we're gonna have any significant opportunities in my opinion, since we are pretty under interaction within supply and demand area, which more so is giving me conviction to wait and for the market to show its hands. Either if it's gonna go continue lower with engulfing, which would give me a lot of conviction afterwards to sell after a fulfillment of the bearish engulfing, which still needs to print, or if price decides to fulfill the IFC of the buyer sensitivity candle, which we have printed yesterday, being the bullish engulfing candle, price can pull higher, closing pretty bullish again, which would give me a lot of conviction then afterwards to buy towards the efficiency of the pullback, being the extreme area, supply area from the internal last bearish push on the 15 time frame. But looking into current price action, it's a bit rangy. I do think this candle should close on the daily, probably in indecision in my opinion. It would be different if price would have firstly fulfilled towards the downside and continued higher. What price did ended up doing was first inducing the previous day's high, which led into reaction from that internal supply towards the downside, fulfilling afterwards that IFC where the buyer sensitivity candle is sitting, where buys can be expected, where buyers can step in as well. But looking into that, we do see we're more so rangy, accumulating after the inducement and the fulfillment here. So price doesn't know where it wants to go. I do think we're gonna close in indecision this that there will be no really opportunity to capitalize on, especially for me. I mean, I can only talk for me as I am having and running my system profitable within combined with automated data which I'm gathering over and over again. So I do adapt every time within the markets, and I will also post a video about my system which I'm having, how I collect and gather my data, how I improve, what are my KPIs are showing, basically the win rate, the profit factor, the specific models, how they interact, and what the outcome of the trades is on a specific trade sample size. So I do have all of that data, as well as I have weekly summarizations which I have gathered over the last weeks and months, and even the whole year of 2025. So therefore, especially quarter four, where it was very accurate, my data. So I could post all of that online for you to have a lot of informations, what to trade, what to look for, how to trade. It's a really simple game plan to follow, which I also can share later on. Just write in the comments what you want to have to see, and I'm gonna give you the value for sure. But ending up with that pre-game plan to finish it, as we do not have a lot of time. We're gonna start off with the higher time frame on the daily time frame, with the higher time frame structure which we're currently having. On the internal structure, we do see the first low which induced to the downside, causing through that inducement a follow through towards the upside, absorbing supply areas, starting an accumulation, building up more so liquidity towards the upside, which we took out and had that follow through towards the upside. So this was our higher low to our higher high. Since then, price changed momentum through having a internal bearish break of structure on the high time frame, mitigating into that demand to supply area, which caused again a follow through towards the downside. We did have a pretty nice objective over here, being that break and test liquidity into that extreme demand area, which price came into. after building all of that liquidity, after we interacted into that bullish objective, price ended up having a pretty nice expansion towards the upside. I do remember the price action. I do think it was in Q4, yeah, something about November. I do also remember that we failed to fulfill fully that daily IFC, which was pissing me off a bit, but yeah, doesn't matter. Price ended up after meeting that objective and that breaking test objective, expanding towards the upside, again absorbing supply, inducing liquidity towards the downside, and seeing that change in momentum, price started to expand towards the upside. Internally, we do see our H4 structure from that low to that high, higher low, higher high, higher low, which led to expansion, higher high. And again, very important to note, so our time frame structure at that point was bullish as well as on the H4, but there is reasons why the price ended up breaking H4 high low and the daily high low, which ended up price being now currently bearish on the higher time frame. So you should be biased bearish. This will be the first note which you're gonna take out of that video. Higher time frame, you are biased bearish. In that sense, looking into the current higher high which has been created a few weeks ago, price ended up running these liquidities, especially previous highs of September, mitigating into a pretty nice objective. We're talking about being the break and test into the bearish block, which has been an extreme block. This block ended up having a follow through and a break of that lower low on the monthly time frame, and therefore confirmed our bearish leg to be that lower high to that lower low on the monthly time frame. So mitigating into that monthly IFC, after building up liquidity towards the downside, inducing liquidity before the mitigation, this is giving us, or me especially, a lot of conviction that price is gonna have a pretty nice retracement towards the downside into the weekly push, which has been that higher low to the higher high which we have created here. And as we do know that price likes to, after creating a higher high, to retrace, we see the pretty nice causation of price starting to retrace was that bearish liquidity cycle, being the build up, the inducement, the mitigation into monthly IFC. So it makes a lot of sense why we started the retracement now of the weekly bullish push, and therefore after breaking that higher lows, price ended up being now currently in that retracement phase. So this is what we do not want to know from the daily. Going further into the price action, this break of that higher low on the daily is as well major liquidity which has been taken, and seeing that major inducement mitigating into a higher time frame demand, which is where buyer sensitivity is sitting 100% due to the fact that we have that inducement, and this inducement led to a follow through towards the upside, breaking the last high. We expect a reaction from there for sure. But one thing to note on the weekly is again that we do have that weekly previous candle closure being pretty bearish, even engulfing towards the downside. We do want to stay pretty cautious since price ended up already fulfilling towards the upside. So any cycle on the daily in these upcoming days or months can give a bearish engulfing, and definitely a follow through into the next objective, being that buyer sensitivity candle here, which looks amazing in my opinion, because first of all it induced structure towards the downside, a structure low ended up having a follow through with a break and test. So a beautiful objective from where we can expect reactions for sure. Again, pretty nice buys. But for now we do sit in that first buyer sensitivity area, but as I mentioned, we need to be careful as the weekly candle closure previously was pretty bearish. Now I can expect price to have that follow through towards the downside due to the candle closure on the weekly, but for now we do need to interact and wait until the markets show its hands. For now it doesn't show its hand for sales at all. Why? Because we have that bullish follow through after reaction from that demand area and the major inducement, showing us bullish pressure. Especially the previous day's candle closure is pretty important, since we do see the price fulfilled lower, had a cycle, induced liquidity on the lower time frame, and price ended up breaking towards the upside and ending up closing the day in a bullish momentum, being a bullish engulfing candle on the daily. So, and therefore, as we talked at the beginning of the video, which would have been pretty nice, would have been, as we do expect that retracement, we just do not know when the retracement is gonna stop. We could have traded buys if price would have firstly fulfilled towards the downside that I see into that buyer sensitivity candle area, which would have give us pretty nice buys into that objective, being the extreme on the M15 time frame, as this is our last bearish leg from that lower high to that lower low. But price ended up inducing the previous day's high liquidity, which ended up price being currently indecisive. We do have buyers in control. We potentially can also have excuse me, we could have sellers in control, since we first of the day started to induce the previous day's high. But we could also have buyers in control, since the fulfillment towards the downside ended up happening afterwards, after or in London. So we do see that indecision. I do think this candle, as I mentioned, will close in indecision, so there's not gonna be a lot of opportunities for today, as daily candle wise doesn't make sense at all to project even that bearish candle or the bullish candle at all, as I can't know it basically in that scenario. But looking into the lower time frame, on the lower time frames, since looking into the lower time frame as the H1, which is still middle time frame, I'm sorry. So looking into the H4 afterwards, seeing that last bearish push, the engineered high, which ended up having a follow through towards the downside, we can now clearly see on that major inducement, after the major inducement into the demand mitigation, that change in momentum. Price ended up having a bullish candle, mitigating into that bearish IFC, pushing lower, failing to create a low, inducing liquidity, and having a follow through towards the upside, breaking internally structure. Pretty nice confirmations. Buyers taking over control. Then we do have that seller sensitivity candle, which is being the decisional supply area of that last M15 bearish leg, because it pulled back within that lower low before breaking structure lower. So this was the causation, therefore it would have been structure relevant, but the price ended up inducing low and confirming that decisional supply to be a smart money trap by having that aggressive follow through towards the upside. So what we do want to take in consideration now on the H4 is very simple. We do have that buyer sensitivity candle area, which we can see here, but we also have mitigated into the supply. So we do see price starting in a sense a range, which I do not want to trade. I do want to have clarity. Price ended up inducing low into that buyer sensitivity area, ended up inducing high. Then afterwards price ended up inducing again high, and currently rejecting towards the downside. So I have no clarity. Buyers inducements, sellers inducements could be in control. We do not know who is gonna be in control in that sense. We also can read into the inducements quickly as you want to. On the M15 for now, we do know our direction as mentioned, being bearish, lower low, started a retracement. We are currently in the complex pullback until we mitigate into the extreme area, where the efficiency of the pullback will be completed, from where we can expect pretty nice sells if the cycles and the daily candles will be aligning and showing its hands through inducements and momentum. Also, we do need to take in consideration that supply area, which has been the M15 extreme, is as well the higher time frame decision of the last daily bullish push. The bearish push, which is being from that high low to that higher high, where price ended up pushing low. This was the last pullback before breaking that last high low of the daily bullish leg, and therefore this is being a pretty nice structure relevant decision area from where selling pressure can be definitely expected. So looking into the current position we are in the discount where the price has created the low, we see the first inducement within the demand, which caused a push out towards the upside, breaking internal structure, retracing, and then ending up inducing towards the downside, which price failed to create a low and pushing higher. So we do have two bullish legs of M15 structure confirming bullish pressure. After breaking that internal structure lower high, price ended up mitigating into a bearish block, which you can see here. It was the decision line 15 if you can remember, but we do see that decision line 15 looks pretty ugly. Doesn't have any inducement inside. It is pretty short in the retracement towards the upside. It doesn't have time really. It was very short term, more so a based drop candle, and therefore price decided, which you can see here, to push low, build up liquidity, induce it break and test or internal structure low, which ended up having that price follow through towards the upside, where three traps were aligned. Basically the first one being the PY from where sellers are getting trapped. Now trend line liquidity building up, and the third trap is being that inducement low, which could be seen as a break and test. After breaking internally, we tested. So after having these three traps, price has a pretty nice expansion towards the upside. So we do see that in that sense our last bullish internal leg is gonna be that inducement low, which caused price to push higher. In that sense, what we now see here, we're mitigating into that supply area, which probably can be a smart money trap, because we do see after creating that bullish push we talked about, price tested that bullish block, pushed higher, ended up inducing low and having a follow through to the upside, breaking structure. So in theory we should be, or we could be, buying from that block. It would make a lot of sense. But why I do not want to expect that supply to be a smart money trap yet is because we do see that we had that break, and after the break the test were still within that small block, imbalances were open. So this can still push price lower as an inducement high, pushing price lower. And as the buys from that inducement demand are not models anyway, it would be market mechanical trading. I do not like it. I more so like my opinion of having that range, inducement high, inducement low, more so indecision. I do not know who's gonna take control, the supply from here or the buy sensitivity candle, inducement low into it, which caused a bullish break towards the upside. So I'm gonna stay patient. Personally, I could try potentially to have reversal buys after the internal medium inducement here, which would be in some way a normal reversal buy, more so in a range. I do not like it, but with a conservative lower time frame you could maybe take it, expecting price to continue higher. This would be the only option which I'm seeing right now. Anyway, within that range there could be happening some things, for example price ranging here, respecting the bullish block, pushing higher, failing to create a low, coming into that weak supply. With development, price can show its hands through inducements, through mitigations into weak SMTs, through reactions, failure, and engulfing towards the upside, which can give you the confirmation for price wanting to push higher. But all of that would be pretty complex and market mechanical, which I really don't want to trade right now since I'm not in a good mental state of mind. So the only thing which which I would see is that internal medium inducement, which I wouldn't like that much, as I mentioned, because price already after inducing that break and test had its chance to have the follow through towards the upside. So price breaking that inducement low in London would more so sign me buyer's weakness than having confidence to buy again, because this inducement should have had the follow through towards the upside, price breaking it again is just signing me that sellers are taking over control from the supply. So it would be a model reversal bias, but not the best one context wise in my opinion, due to the mentioned facts and the indecision. So the best thing to do here is to wait, in my opinion, wait for follow through, wait for price to show its hands. For example, what we could expect potentially is if price ends up, for example, inducing high here and having now the follow through towards the downside, having a break and test liquidity printed with a bearish block, and seeing tomorrow that price is having a extreme follow through towards the downside, a bearish engulfing candle which you need with a lot of pressure and momentum, which is gonna sign you a lot of momentum and pressure, you will be able to have potential sells. For now, price is not showing any hand, and if you then have a pretty nice cycle, for example Asia opening here, Asia opening here, having a build up, a inducement of that break and test, mitigation into a block, bearish block, you could expect potential sells or expect that daily projection to be bearish tomorrow. But for all of that we do need development. I will not take that in consideration. I already mentioned what I think about the session, so we could have potentially that reversal buy, but nothing I like. Yep. And looking into the GU, I will not do analysis.